Yes, thank you. Very happy to be here. So to start with, we issued a report in June called Making Finance Serve Nature. And in that report, and it's extremely relevant to this discussion, we try to look at conservation finance and the way it's evolved or not for the last decades. And so we make the point that if you want to move to mainstreaming, so conservation finance is often mentioned as about 50 billion a year, stricto sensu, and so that if you want to move to mainstreaming, you need to take a step back and look at the bigger picture of incentives within the financial system as a whole, and not just the private sector. So that's just a preliminary remark to say, I think that there are some structural limitations to how much you can scale up the current financing that there is. Now, in terms of opportunities, yes, indeed, you might wish that all investors are focused on the long term, deploying patient capital for the good of society. If that's the case, indeed, you read the science and the IPBES report and the opportunities that you need to help and pretty fast. I think if you are a type of investor which is more focused on short-term optimization of risk-return ratio, I think the opportunity is there as well, because that risk-return ratio will be dramatically affected in this space over the next coming years. Of course, it might be something around physical risk and the risk of environmental collapse. That's sort of a worst case scenario, and if that's going to happen, you want to start moving now, rather than facing something which is a bit more abrupt and chaotic. So that's on the physical side, and then you have transition risk, but also opportunities, which I think is a direction of travel right now. And so what are some of the factors that will impact your risk-return ratio, and which are as many opportunities to invest now? I think there's the political direction that we all hope to see at CBD next year, but also if it doesn't happen at the level we all hope it happens, it will happen definitely in the following years. So that's environmental targets, but also then fiscal and economic incentives that will be changing again quite dramatically over the next few years. Accounting rules as well. There are many discussions I think we'll discuss later about the way accounting rules should change to incorporate the value of nature, to put it simply, into your balance sheet. Public money will move. There are big discussions in Brussels about the European Green Deal. I think there's a case to say maybe biodiversity and ecosystem should be a priority for that public money. So again, that will, of course, de-risk some of your investments, but it's also creating investment opportunities. Regulation is on the way, so as part of sustainable finance, you probably all know that biodiversity and ecosystems is part of the discussion. We might come back to it, but specifically in the taxonomy, there are people looking at defining economic activities that harm biodiversity and ecosystems, or those that support the restoration and have a positive impact, and how that will be reflected in labels, disclosure, and so on. That will come to you. So again, you want to start moving now, because this is coming from the regulators as well. And lastly, I think central bankers will be moving as well. It might be because of a more ambitious change of mandate, or otherwise because they need to be looking at environmental risk in general. So that's another reason to be moving now. And last but not least, if you're still not convinced, I think there's liability and reputation. I don't think you want to be exposed or held accountable by the youth in the street, or be called and be held responsible in court for liabilities for environmental impact. So I think there's a huge list of opportunities, or a big business case. Yeah.
So Benoît, yeah, what would be your sort of few key things that we need to do between now and October next year?
Thank you. So indeed, we lay out these priorities in our report in more details. But so if I have to stick to three, I would say, and as we said, there are challenges. There's a lot of complexity. I don't think it should be on the shoulders of private investors to manage that complexity. And I mean, of course, you have pioneers. We just heard, Mike, Kering and Mirova, and so it's pretty simple. You can just put your money with them, or you can also learn from them and replicate their best practices. But I think you need, again, to take a step back and look at the bigger picture, and then sort of mechanically, it might be that finance will follow. So I think that should be the focus. So first, you need political ambition at CBD and beyond. That's basically sending a strong signal to market. So that needs to be a priority. Of course, there's environmental objectives linked to that, and possibly environmental regulation that starts to be implemented. I don't know if we'd be here if there wasn't the Paris Agreement. So that sets the direction of travel. So political ambition. Number two, I think you need to unlock public finance to some extent. Nature is a public good. So if you look at some of the difficulties to set up instruments, and Philippe alluded to them in terms of the uncertainty of the revenue stream or high transaction costs, it also comes down to the fact that this is a public good, and so it's actually best suited for public investments. There are big discussions in Brussels about this European Green Deal I mentioned, and I think there is a case, because of the nature and the sort of less bankable aspect of these investments, for given priority to that public money to go to ecosystems, biodiversity. So political ambition, unlocking public investment, and then I think moving central bankers. We discussed this. It might require a bigger change of mandate, but I think they should be looking at environmental collapse, which both the IPCC report and IPVS report clearly tell us is we are on the path on if we don't take urgent action. And so the question for them is really, what do you do about that? And they've already started to answer when it comes to climate that the earlier and the earlier transition, the most orderly transition, the lower the risk for the financial system as well. Although it is a strange perspective, right, to discuss about environmental collapse as a risk to the financial system. But anyway, that's their perspective. And so basically put it on them as well. So political ambition, unlocking public investment, and then bringing central bankers into the game. You just reminded me I need to prepare a very short intervention on what if I was a central banker, right? Because that was your question. So I'm not, but I think, so two things, signaling that you will be asking these questions, that, it is within their mandate today, as we know, purely on the prudential side, to consider environmental risk, which is a massive material financial risk, so that you would be doing stress testing in the future and so on. So I think the signal is very important. And so, incentivizing investors to look at the relationship between their balance sheet or asset under management and an economy that is destructive of biodiversity, which ultimately is a threat to our safe operating space. I think that's within their current mandate. That's on the macro-prudential side. Then, of course, there's the whole issue of monetary policy, which we all know is much more sensitive to discuss. I think you mentioned something around social unrest in your question. And then frankly, we'd need a whole session on this issue of central banks and so on. And also then, I suppose, on the distributional effects of monetary policy over the last few years, which have been quite disastrous, as we all know. So as a conclusion, I think, so you need to look at that and possibly the link with social unrest, even if it's quite indirect, possibly, or maybe not so much. But the sort of signal that, you'd be ready with monetary policy instruments to some extent at some point to sort of bail out nature rather than bailing out the banks, I think that's a message that would be welcome generally.
Okay, great, thanks.